Every generation dreams of finding the fastest path to financial freedom. Some search for the next hot stock. Others believe cryptocurrency, options trading, or viral investment trends will make them rich overnight. Social media constantly promotes stories of people turning a few $1,000s into millions in what seems like a matter of weeks. These stories attract attention because they appeal to one of the strongest human emotions, the desire for instant results. But real investing has never worked that way. The financial markets have always rewarded discipline far more than excitement. While millions of investors spend their days trying to predict tomorrow's stock price, the world's greatest investors focus on something completely different. They focus on owning outstanding businesses and allowing time to multiply their wealth. Patience is not simply a personality trait. In investing, patience is a competitive advantage. Every day, markets move up and down. News headlines create fear. Political events create uncertainty. Economic reports influence investor sentiment. Social media amplifies every rumor. Many investors become emotionally exhausted because they believe they must react to every piece of information they see. Successful investors think differently. They understand that the value of a great company is not determined by today's market price. Businesses grow by increasing revenue, serving customers, developing better products, and generating profits year after year. Temporary market fluctuations cannot erase the long-term strength of a truly exceptional business. Imagine planting an oak tree. During the first year, you notice almost nothing. After several years, it begins to grow steadily. Decades later, it becomes one of the strongest trees in the forest. Wealth works the same way. The first years often feel slow. Progress appears invisible. Many people become impatient because they cannot immediately see dramatic results. They abandon their investment strategy just before time begins working in their favor. This is exactly why so few people experience extraordinary financial success. The market constantly tests your emotions. It asks whether you will remain calm when prices fall. It asks whether you will stay disciplined when everyone around you becomes greedy. It asks whether you truly believe in your long-term plan. Every investor says they are patient until the market falls by 20 or 30%. Then everything changes. Fear begins replacing logic. People start checking stock prices every hour. News channels predict disasters. Friends tell each other to sell before everything gets worse. Suddenly, intelligent people begin making emotional decisions. History repeats this cycle over and over again. The investors who panic often lock in permanent losses. The investors who remain calm frequently become the biggest winners once markets recover. Financial success is rarely determined by intelligence alone. It is determined by emotional control. Anyone can buy a stock. Very few people can hold it confidently through years of uncertainty. That difference separates average investors from exceptional ones. Modern technology has made investing easier than ever before. You can purchase shares within seconds. You can monitor your portfolio every minute. You receive instant notifications whenever prices change. Ironically, these conveniences have also created one of the biggest problems facing modern investors. People watch their investments too often. Every small decline feels like an emergency. Every temporary gain creates excitement. Instead of thinking like business owners, investors begin thinking like gamblers. A business owner does not sell an excellent company simply because someone offered a lower price for one day. Yet stock investors do exactly that. Imagine owning a successful restaurant. One customer offers to buy it for $1 million today. Tomorrow another customer offers only $900,000. Would you immediately assume your business became worse overnight? Of course not. Nothing changed inside the business. Only someone's opinion changed. The stock market behaves exactly the same way. Prices represent opinions. Value represents reality. Understanding this distinction changes everything. Many investors spend years searching for the perfect investment. In reality, there is no perfect investment. There are only disciplined investors who consistently make rational decisions. Success does not come from predicting every market movement. Success comes from avoiding major mistakes. One unnecessary panic sale can erase years of patient investing. One emotional decision can permanently damage long-term wealth. This is why discipline matters more than prediction. The world's greatest investors rarely appear exciting. They are often quiet, patient, consistent. They avoid unnecessary risks. They ignore market noise. They continue following their strategy while everyone else becomes distracted. That consistency produces remarkable results over decades. Consider the incredible power of compounding. Imagine investing consistently every single year. During the beginning, growth appears slow. Then something extraordinary happens. Your investment earnings begin generating additional earnings. Those additional earnings generate even more earnings. Eventually, growth accelerates without requiring additional effort. Time becomes your greatest financial partner. Unfortunately, patience has become increasingly rare. Modern culture celebrates speed. Instant messaging. Instant shopping. Instant entertainment. Instant success. But investing refuses to follow those rules. The market operates according to a completely different timetable. It rewards decades instead of days. Years instead of weeks. Consistency instead of excitement. This creates an enormous opportunity. Because patience is becoming increasingly uncommon, those willing to remain patient possess an advantage that cannot easily be copied. Anyone can download a trading app. Anyone can buy shares. Very few people can remain emotionally stable for 20 years. That emotional stability creates wealth. The greatest investment opportunities often appear during periods of widespread fear. When markets crash, headlines become negative. Experts predict disaster. Confidence disappears. Most investors rush toward the exits. Patient investors quietly begin looking for opportunities. They understand something incredibly important. Strong businesses often become temporarily cheaper during market declines. Their future potential remains intact. Only their prices change. This difference creates opportunity. Fear causes discounts. Patience captures them. Throughout history, every major financial crisis eventually ended. Markets recovered. Businesses adapted. Innovation continued. Economic growth returned. Those who remained invested participated in that recovery. Those who abandoned the market often missed it entirely. Missing only a handful of the market's strongest recovery days can dramatically reduce lifetime investment returns. This is why attempting to perfectly time the market usually fails. Nobody consistently predicts every high and every low. Even professionals struggle. Instead of trying to predict tomorrow, successful investors prepare for the next decade. They understand that uncertainty is permanent. There will always be another crisis. Another recession. Another political conflict. Another unexpected event. Waiting for perfect certainty means waiting forever. Investment decisions should never depend upon temporary emotions. Fear encourages selling. Greed encourages buying. Successful investing often requires doing the opposite. When others become irrationally fearful, opportunities emerge. When others become irrationally optimistic, caution becomes valuable. Emotional balance is one of the greatest financial skills anyone can develop. Money itself is neither emotional nor logical. People are. Markets simply reflect human behavior. That behavior has remained surprisingly consistent across generations. Technology changes. Companies change. Industries evolve. Human psychology remains remarkably similar. People still fear losses. People still chase easy profits. People still overreact to short-term events. Understanding psychology is often more valuable than predicting economics. The greatest portfolios are built through thousands of ordinary decisions repeated consistently. Saving regularly. Investing regularly. Ignoring unnecessary noise. Remaining patient. Continuing despite uncertainty. These habits appear boring. Boring is often profitable. Excitement usually belongs to speculation. Discipline belongs to investing. Financial freedom rarely arrives suddenly. It arrives gradually. One investment. 1 year. One decision at a time. Eventually, those ordinary actions create extraordinary results. People often ask what the secret to wealth is. There is no secret. The principles have remained remarkably consistent for generations. Spend less than you earn. Invest consistently. Avoid unnecessary debt. Own quality assets. Remain patient. Allow time to multiply your efforts. Simple does not mean easy. The difficulty lies in maintaining discipline when emotions become overwhelming. Every market correction tests your confidence. Every recession tests your patience. Every financial crisis tests your commitment. Passing those tests separates investors from speculators. Imagine looking back 20 years from today. What decisions will matter most? Will you remember today's market fluctuations? Probably not. You will remember whether you stayed invested. Whether you continued learning. Whether you trusted your long-term strategy. Those decisions shape financial futures. Wealth is rarely built through one extraordinary investment. It is usually built through extraordinary consistency applied to ordinary decisions. That is Warren Buffett's greatest lesson. Not merely buying stocks. Not merely choosing companies. But developing the patience necessary to allow exceptional businesses and exceptional ideas enough time to produce exceptional results. Markets will continue rising and falling. News will continue creating fear. Experts will continue making predictions. None of that changes one timeless truth. The patient investor understands that time is an ally. The impatient investor treats time as an enemy. The market eventually rewards one of them. The choice belongs to each of us. Every investment you make is also a decision about the future version of yourself. Will you choose instant gratification, or lasting prosperity? Will you chase temporary excitement, or build permanent wealth? The answer is not found in tomorrow's stock price. It is found in the habits you repeat for years. Because in the end, wealth is not created by luck. It is created by discipline. It is protected by patience. And it is multiplied by time. In today's fast-moving world, everyone wants quick profits. Social media is full of people claiming they doubled their money overnight through stocks, crypto, or trading. These success stories make investing look easy. But Warren Buffett, one of the greatest investors of all time, teaches a completely different lesson: real wealth belongs to those who stay patient. Most investors lose money not because they choose bad companies, but because they make emotional decisions. They panic when prices fall and become greedy when prices rise. Fear and greed are the biggest enemies of successful investing. Imagine buying shares of a great company. A few weeks later, the stock drops by 20%. Many people immediately sell because they believe they made a mistake. But experienced investors understand that short-term price movements don't always reflect a company's true value. Temporary declines are often opportunities, not disasters. Patience is one of the most powerful financial skills anyone can develop. Building wealth is rarely about finding the perfect investment. It's about giving good investments enough time to grow. Just as a tree needs years to become strong, your investments also need time to compound. Compounding is often called the eighth wonder of the world because it allows your money to earn returns, and then those returns generate even more returns. Over decades, this creates extraordinary wealth. However, compounding only works for people who resist the urge to constantly buy and sell. Successful investors focus on the long term. They study businesses, understand their fundamentals, and invest with confidence instead of chasing daily market trends. They know that temporary market crashes are a normal part of investing, not a reason to abandon their strategy. Warren Buffett himself became one of the richest people in the world not by making risky bets every day, but by consistently investing in high-quality businesses and holding them for many years. His success proves that discipline often beats intelligence in the financial markets. If you want to become financially successful, stop asking, "How can I get rich this month?" Instead, ask, "Where will my money be in the next 10 or 20 years?" That single change in mindset can transform your financial future. Remember, investing is not a race. It is a marathon. Markets will rise, markets will fall, and headlines will constantly create fear and excitement. But those who remain calm, stay invested, and think long-term are the ones who usually win. As Warren Buffett reminds us, the stock market transfers wealth from the impatient to the patient. The question is simple: which side will you be on? Every day, millions of people enter the stock market hoping to make quick money. They chase hot stocks, follow social media trends, and react to every headline. When prices rise, they become greedy. When prices fall, they panic and sell. But history has shown that wealth is rarely created by those who constantly jump from one investment to another. The greatest fortunes in the market have been built by people who understand the power of patience. Successful investing is not about predicting tomorrow's price. It is about owning great businesses and allowing time to work in your favor. Markets will always experience fear, uncertainty, and temporary crashes, but strong companies continue to grow, innovate, and create value over the long run. Patience allows compounding to do its job. Every year your investment grows, the returns begin generating returns of their own. This is how small investments can become life-changing fortunes over decades. Those who stay disciplined during difficult times are often rewarded the most when the market eventually recovers. Warren Buffett's message is simple yet powerful: the market does not reward speed, it rewards discipline. The impatient search for shortcuts, while the patient build lasting wealth. In the end, investing is not about beating everyone else today. It's about making decisions that will still look smart 20 years from now.